Ooh, we've got a bunch of people joining in today. Awesome. Let me pause. We're good there. So I love how when you try to do Facebook live feeds from Zoom, it sort of catches you in the like trying to type and looking really stupid as it catches you. So there's always like that that thumbnail that just makes you look terrible. Well, today I am super excited that we're going to be talking about financial health for agents. This is a topic that is so critical. And before we get started, I want to welcome everybody who has joined on Zoom and on Facebook Live. These webinars are hosted every Wednesday afternoon, 4 p.m. by the Real Estate Technology Institute. Our team loves sharing what we know about technology, and when we don't know about certain technology, we find people who do. And so I'm thrilled to have Ryan and Matt join us from Symba, which we'll get into in just a couple minutes. For those of you that this is your first Real Estate Technology Institute webinar, welcome. I know many of you are joining because your association has promoted this. Some of you may be joining because you're members of RETI or you receive it as a member benefit. Either way, welcome. We hope to see you back week after week. We're always promoting different types of content. And I think the one thing that connects us all, I tend to focus more on operational and brokerage related technology. Other people focus more on marketing and AI, and we all have different expertise. The one thing that connects us is that we believe very firmly technology is never going to replace a realtor, but a realtor with technology is going to replace one without. So that said, today's topic does hit, first of all, it's extremely timely. We're talking about expense tracking, expense deductions, how we can make sure that you have a healthy financial business. And make no mistake, we get into the real estate space, so we become realtors, and we are running our own business. It's important to understand where you're sitting and making sure that you are not overpaying in taxes, number one, but number two, that you have just healthy business operations, knowing where you sit on a day-to-day basis. So with that said, we are going to go through a couple topics today, but I'd first like to introduce Ron and Matt. So I'm going to read some bios. I don't normally do this. I might skim it a little bit, but Matt is the CEO of Real Books CPA. Money's always been a passion of his. He opened his first investment account in 5th grade and listened to finance talk radio shows growing up. During his time in public accounting, he gravitated toward clients who were real estate investors. This experience allowed him to learn from the accounting and proactive tax planning done for these clients at higher levels or highest levels. After working with many real estate investors and small business owners, Matt decided to become one full-time. This led to the launch of Real Books to provide accounting services for other real estate professionals, and Stony Brook Capital to further his real estate portfolio. So welcome, Matt. Thank you.
Thanks for having me.
And Ryan is the head of growth and the co-founder of Symba. I met Matt and his business partner, Evan, a few months back, and I am just thrilled with what they've built out with their app, which you'll get to see today. Previously, he was a full-time real estate agent for 4 years, selling over 100 homes on the #1 real estate team in Kentucky. After doing well in his first year in business, he barely had enough money to pay taxes. Does that sound like something a lot of us go through in the real estate industry? I know I went through the same thing. After watching this happen to other agents around him, he quickly realized that everyone in the real estate industry wants to teach you how to be an agent, but nobody wants to teach you how to run a real business and manage the money that you do make. So this led to the launch of Symba, and it's all about helping you become better entrepreneurs and business owners. So with that said, welcome, Ryan. Thank you for joining us.
Yeah, thank you. I'll get this slideshow pulled up real quick.
Great. So we do want to leave today's webinar open to questions from everybody from the audience. Feel free to send them in. We'll try to address them as the webinar goes on, but if that doesn't make sense for the flow, we'll address them towards the end. There will be some time for Q&A. Be aware that the normal response may be, I can't give you direct tax advice. That is a common theme when it comes to this. So asking more open-ended questions rather than questions about your specific situation would probably be appreciated by everybody on today's webinar.
All right, let's get started. So first, say thanks for the intro, Warren. I think Matt and I are both really excited to be here and get started. So give a little clarity of how this webinar will go. It's going to be broken down into basically two parts. And the first part, I'm going to be asking Matt, who is a CPA and the CEO of RealBooks, some common questions that real estate agents often have about taxes, business expenses, or really just like any tips they can use to help their business around the financial side. And after that, we'll get into what the Symba platform is and how we work with Matt and RealBooks to create a seamless tax filing experience for agents. And then after that, we're going to demo the Symba product. And then at the very end, if we do have time, we'll take some Q&A. And then one thing I want to point out before we get started is we have QR codes on all the slides if you want to set up a tax call with Matt or download the Symba app. But with that being said, we can go ahead and get started. So, start you off with the easy one here, Matt. Can you explain the difference between a business expense and a personal expense for real estate agents?
Yeah, this is a really good question, especially because there are a lot of agents out there that operate without like a legal entity. That would be like an LLC, a corporation of some kind. And so sometimes those expenses are running through the same bank account that are for you're trying to sell a home or you're trying to help a client. And then the next expense is the groceries for you or you and your family. And it can be hard to keep track of all that stuff. So one of the best practices, I think, for agents is maybe opening just an account for those expenses. And then if you're sitting there like, well, how do I differentiate between what should go in the business account and then what should go on my personal account? The IRS standard for that is ordinary and necessary. So ordinary means it is ordinarily accepted in the business. These would be things that most agents do. Advertising yourself, taking clients out for meals, the gas you put in your car, driving, between showings, things like that. Now, personal expenses are more obviously things like entertainment or the food that you eat, when you're by yourself, or the groceries that you buy for the household. So I think the difference between the two are, somewhat obvious to us, but some expenses kind of blur the lines. What if I need a computer? I'm going to be using it for real estate, but I'm also maybe going to check my personal email on that computer. The big thing there is just working with the professional and tracking this stuff. So if you have something that is kind of business, kind of personal, keep track of it. You can use the business account to pay for it. And then at the end of the year, or maybe if you work with a CPA monthly, depending on your level of activity, you can always go over that with them and tell them, hey, this is something that I've used heavily for being an agent. But if I'm being honest, I do use it a little bit personally. What's the best practice there? And a good CPA is going to be able to communicate those things with you. So whenever you're thinking business expense, think, is it ordinary in the industry? And is it necessary for me to get this job done? If it is, I would track it.
Awesome. And I got some questions on a couple key ones. I always see, they're kind of funny ones to me, but I always see real estate agents asking about in Facebook groups, and they all say their accountants say different things. So haircuts, clothes, I hear those two a lot of fighting, whether that's business or personal expense. And I'm just curious to hear what your opinion is on that.
I think it all comes back down to tracking. One of my favorite stories about the ordinary and necessary description of a business expense is that there are tax law or tax court cases where actors out in Hollywood have written off things like haircuts and clothes, and they actually won that tax court case. A haircut was ordinary and necessary for that type of job. Now, we don't have a case specific to a real estate agent getting a haircut, but I think if you track those expenses and you're willing to have a discussion with your CPA about what's reasonable, I think very well you could at least write off a portion of your professional clothes and things like your haircut, for ladies out there, makeup, that kind of stuff. But it all comes down to, do we have the amount, and can we reasonably allocate that between personal and business? I think the biggest thing, and we'll get into this a little bit more later in the discussion, but I think one of the biggest things that makes it hard for a CPA to say yes to something like that is if you're just showing them an Excel spreadsheet with the amounts you paid for your haircut and your clothes. It just doesn't feel like it's real enough or being kept track of in a business manner for them to be comfortable putting that on your tax return. And remember, we sign these returns before they go out when we prepare them for you. So we want to make sure this stuff is for business and legitimate, but if you're tracking that, that creates the conversation.
That's good to hear. Those I've always wondered about those myself, so I'm sure other agents have as well. We'll go to the next one. So it's kind of a loaded question here, but what are the most common business expenses for real estate agents? Or maybe another way to phrase this one is, or what are some of the biggest deductions expense-wise that real estate agents can take advantage of?
Yeah, so I'm a real estate investor, but not an agent. So I'm going based off the clients that I file for who are agents. A lot of it will be things like software, using different tools, whether it's for business financials, whether it's for advertising, lead generation. Those seem to be a really big one that can add up quick. Another one, and these are kind of what we call non-cash deductions from the CPA language. And those would be things like business miles and your home office. A lot of agents do maybe the majority of their work from home. That might be shifting now that we're coming out of like the pandemic. But if you're 1099 and you can claim that your principal place of business is your home, there's a calculation where you can use the square footage of that office. Doesn't have to be its own room. It can be a section of a room, but if it's set aside for business only, then you could take a deduction on your tax return. It's $5 per square foot. There's also the standard mileage rate. This year with inflation and the gas prices kind of going all over the place, we actually for the first time got an adjustment in the middle of the year. So your business miles from January 1st to June 30th of 22, those were worth 58.5 cents per mile. So that's a pretty nice deduction if you're driving around a lot, trying to close deals, driving to closings, driving to showing a home. And then after that, from July 1 to December 31 of 22, you can take a 62.5 cent deduction on all of those miles. There's a lot of great apps for tracking those miles. Ryan, you might have to fill me in if Symba has that capability, or if you guys are working on it. But there are some great automated ways of having those miles. It's like a dating app. You just swipe one way or the other, business, personal. You send it to your CPA at the end of the year. And those are great non-cash deductions. You don't even have to spend the money to get them.
Yeah, so we don't have a mileage tracker yet. We're working on it. Something like Mile IQ is a great one that I hear a lot of real estate agents use. Real quick, do you know what the deduction is for 2023 on mileage?
Not off the top of my head, but that is they have released it. It's very searchable.
Okay. I think it did increase. I'm just not sure what the number is. And to all the agents listening, we have a list of 100 plus business expenses. that we'll be able to email out to all of you all after this.
Chat GPT is telling me 65.5. So we're going to go with that, but that's an unofficial answer.
All right. Yeah. That's very timely right there.
Could I jump in with a quick question?
Yeah.
Sure.
So somebody asked, they said that they're a new agent and they didn't make any sales in 2022, but so they didn't get a 1099 miscellaneous form, but can they still deduct their miles from showing houses and the fees that they paid for being an agent?
You know, that's one of my favorite questions because there's a lot of kind of, I'd say probably on Google for the most part, but there's a lot of like mixed reviews as far as like, what am I allowed to do from a tax deduction standpoint? The one misconception is if I didn't have income, am I allowed to take business expenses? And the answer to that is actually yes. If you look at the code and the language, the business schedule on an individual tax return is actually with a profit motive. So if you're spending money to try to make some money, driving around for trying to show homes, doesn't mean they had to close, but you had a profit motive. And that actually opens you up to tax deductions on the business schedule. So that's really important right there. It's a great question.
How does that work, Matt? If there's no income and they write those off, do they get a return?
Another good question. So for a new agent, odds are you probably had another job during the year. And so that loss would actually offset some of the income from your old job. If you were paid like by a W-2, it might actually create a situation where you could claim a bigger refund than you would have been able to before. If you had absolutely no money from 2022 that was considered income, like no cash came in, you were just working really hard all year, trying to make something work, but you weren't able to. You are allowed to take, it's subject to limits, but they're quite high. You are allowed to take an operating loss carry forward. So in that case, you could use some of your losses from 2022 to offset 2023 income. But make sure if you're doing that and you're carrying numbers forward that you are working with a CPA. My understanding is like online tax, software, TurboTax, H&R Block, online filing, that might not be as good of a situation. It could actually cause some problems. So if that's your situation, no income from 22, only expenses, just make sure you're working with somebody. It'd be worth the money at that point.
Cool. Thanks for that. This next one, how should real estate agents track their business expenses for tax purposes?
Well, I'm going to say Symba. From what I've seen, this is a really awesome tool for real estate agents. I'm always a fan of something that's built specifically for an industry. For example, I own an accounting firm and we do all of our billing and tracking through a software that's built specifically for accounting firms. So I think it just makes sense. There's a lot of synergies when something is thought of with that particular professional in mind. But if you're just getting started or you're trying to go back to last year, the best way to track is going to be through an application that allows you to link your bank account. I would say that spreadsheets at this point, it's not helpful to you. It's very time consuming. It creates headaches and it's not really helpful to your CPA either. We used to let clients send in like profit and loss statements on an Excel spreadsheet, and it was not fun for anybody. It wasn't helpful. I would definitely say link your bank account. That's the first step because you need those bank transactions. The second step is, what about receipts? What about invoices? Well, a lot of applications that allow you to link your bank account, they'll also allow you to go to that transaction and snap a photo of the receipt right on that app. But if that's not an option for however you're doing your bookkeeping, I always recommend people use something like Google Drive, ShareFile, OneDrive. Get the app on your phone and just create a folder for the year. So say we're in 2023 now, title 2023. And then every time you do have a business expense, take a photo of that in that application. And you don't have to go through and sort them out and categorize everything. But if you did ever get audited, you would know that, okay, I've got all my receipts there. And then at the time of getting the audit notice, which we don't hope nobody gets that, but if you did, then you could go back and categorize those receipts, get everything organized for that auditor. So it's kind of a get everything in there for now. And then if you do get audited, you get really unlucky, then go through and do the work of the organizing later.
The talking about the photo receipts there, that leads in pretty well into this bottom question here. What's the best way to document and prove their business expense? Like, is there something they should write on that receipt?
There's nothing you need to write. The biggest thing they're looking for is, did you actually track it? So if you have the folder, you can go in and update the dates and the descriptions, for each file. That's great. The applications that allow you to snap the photo directly onto the transaction from the bank feed, those are the best because you never have to go back. You could give the auditor that file, and it's kind of like, I describe this as having 3D books. You've got your bank feed coming in, you've got everything organized, and then if you wanted to drill to that third layer, you've actually got the receipt attached there nicely to that transaction. I think any auditor would probably look through a sample of transactions and call it a day if that's your situation.
Awesome. This next one. So I think a lot of agents who are starting to find their way in the industry, starting to do well, make some money. Everybody wonders, what's the right time to create an LLC or S Corp?
So I'm going to speak more to the S Corp here. You do need an LLC to form an S Corp. But an LLC, I think it's going to be more up to like liability protection. That might be a good conversation to have with somebody, who's like a mentor agent who understands the liability protection, or just an attorney or lawyer that you work with. They're going to be able to recommend like the right time. And just to clear the air, this is another misconception. You don't need a business entity to take business deductions on your tax return. So we get that question a lot, and that's actually false. You can take deductions as long as you have a profit motive. So the S Corp comes into play when you start making profits. Now, remember, this isn't just commissions. This is what you get to keep after your commissions are reduced by things like advertising, meals with clients, all those expenses that you have. If you're making like above 60,000, for some people, it might be 100,000. It kind of just depends on the person. But this is a situation where paying for some of the requirements of an S Corp will actually still be cheaper than paying the full amount of your Social Security and Medicare taxes that you're going to owe as a self-employed individual. So what you would need as an S Corp owner is you would need to work with somebody who's familiar with making that election and doing it the right way. And then you would need a payroll provider, because you're going to set an actual salary. So think of you're kind of now working for your business that you've created rather than you are the business. It's like one step forward. So you're going to need a payroll provider. The S corporation actually files its own tax return, so it won't go on your return anymore. You'll actually get what's called a K1, and those numbers will be from your S Corp business, and that's how you'll report taxable income on your personal return. And then lastly, you'll need like a real bookkeeping file. Symba's definitely a great option for this. It may even be worth hiring a bookkeeper at that point just to make sure things are professional. Because remember, if you're an S corporation, the idea is that you're supposed to act as a corporation would. So you need official books and records. All three of those services have inherent costs to them. So you want to make sure you're earning enough profit to justify taking that step. I wouldn't make an S corporation election super early in being an agent. I'd want to make sure I'm generating a high enough level of profit and that I know I'm going to be doing this for a period of time before I jump into that step.
Got it. Is there a certain amount of money you recommend agents have set aside before they start an S Corp?
Do you mean like just as far as some reserves for the corporation, somewhat of like a war chest?
Sure. Yeah.
I do. I think if you're going to this level where you're going to elect S corporation, you are required to do that payroll step. And I know that commissions aren't consistent month over month. You might have a really great month and then you might go cold, or maybe certain times of the year are better in your market. And if you don't have some reserves, those payroll requirements are still going to come up, every biweekly or every month, depending on the schedule you set. So you want to make sure there's enough cash in the business to at least absorb the payroll to you each month, even if you had like a 0 commission month, which hopefully you're not ever doing that, if you're doing an S corp. But just in case, it is good to have some reserves.
Got it. All right. What's the biggest mistake you see real estate agents make when it comes to taxes?
I'm going to give a really simple answer on this one. The biggest mistake I see is just not tracking those deductions. What happens when we were getting started as Real Books and we would kind of take on any kind of client, we'd get some clients that basically would submit their 1099, that they got from all their commissions, and then they would submit some business expenses, but it was in their mind maybe more than was actually affecting on their tax return. So they'd report the big ones, the obvious expenses from throughout the year. And what would happen is when we gave them their tax bill, they would always be shocked and always say, well, let me look back through all my bank records. Let me try and figure out if I have more deductions. And that's a painful process for everyone. I never like having to communicate with a client that they have a big tax bill that they weren't ready for. I also I feel bad for them having to go back, a year ago, sometimes more, and dig through bank records to try to find some deductions to make this a little bit better. You don't want to pay taxes on more money than you actually made. And that 1099 is only the revenue. All those expenses need to be tracked and you need to keep up with those so that you're only paying taxes at the worst on the actual money that you got to keep from your agent business.
Yeah. And, I think speaking from personal experience and knowing a lot of agents in the industry, the reason for this is agents are some of the busiest people in the world. It's one of the most time-consuming professions there are. You're working during the week, during the weekend, when other people aren't working. People like to see homes when they aren't working. So that's when you have to show homes. And really the last thing you want to do at the end of the day is take the time to organize your expenses and finances. But it's important to remember that technology really can help make that easier. It's still going to be annoying, but if you set a day of the month to this day of the month, I'm always going to organize my finances and expenses, it can make it a lot easier.
Yeah, I just want to echo one thing, tax savings. If you read any article on Google, look up how to save money on taxes, they're going to make it sound really easy and like you have to do no work. But there is some discipline required if you want to save some money on your taxes. And I think the applications that are coming out now, like Symba, make it easier than it's ever been before. So take advantage of things like that, apply some discipline. I think Ryan's idea of once a month, or if it gets overwhelming, maybe once a week, and just keep up with this stuff.
I have a couple of quick questions that have come in. Keisha and Astrid, you asked about what applications allow you to track that. I think we're going to see one today. So let's just hold off on that side of it. I have a question about what's the difference between an LLC and a PA?
So I think that might be a little bit outside of the scope for what I would be able to recommend today. And that's just because when it comes to legal entities, a lot of the liability protection, that's going to be more from your state law, and an attorney is going to be the best person to ask, hey, this is what I do for a living. What's the best business entity to protect myself? From a tax perspective, that kind of all falls under the same umbrella. It's going to go on your individual return. The IRS actually calls LLCs disregarded entities, which means well, a single member LLC, they don't even consider it a business. They just see you as the individual. So LLC is very state law, is very liability protection conversation. Definitely have that conversation with an attorney, or like I said, an agent mentor who kind of understands what your business is and what you might need.
And as a follow-up to that, and this might not be for you, but if somebody has an S Corp, can they have multiple businesses under the S Corp, not just real estate?
They can. One of the big things I like to caution people on when it comes to S corporations is you really want to keep it focused on one activity, and you want to keep it focused on actively earned income. Think income that you have to go out, get your hands dirty, make connections, and sell stuff. We don't ever want to do, and this is something that I think a lot of agents end up, buying rental properties. It kind of makes sense. You're really good at doing comps. You know when a deal might be undervalued and might have a good pulse on those things. You definitely don't want to put rental properties inside of an S Corp. So at all costs, if you do the S Corporation election, make sure you're working really closely with a professional and make sure it's kind of focused on like one business activity. That's when we see the most success. When you get diversified, it might just be better to form a new business and have it be separate.
Got it. Cool. Before we go to the next one, I thought it was funny, Matt, that you said organize. Maybe you should organize it once a week, and I said once a month. I think that's the real estate agent coming out of me and the accountant coming out of you.
That is exactly what it is.
Okay, here's the next one. What do you think is the most common misconception real estate agents have about business expenses or just really taxes in general?
Yeah, well, I mentioned one earlier where you don't need the LLC to take business deductions. If you're hearing that from anybody, that's bad advice. It might actually be somewhat salesy, for lack of a more stronger term. There are people that are just trying to sell you an LLC. They want to get you set up, and be wary of this as well with S Corps. Just because someone says that they find out what you do, maybe they find out about a level of commissions that you're at and they really want to get you set up, make sure you're being well-rounded with that. Talk to an attorney, talk to a CPA, look at it from all angles. The other misconception, I think, is that, spending time tracking deductions maybe isn't worth your time. If you can just sell enough, you can always pay the tax bill. And I think that tracking your deductions and thinking about business expenses as a tool to keep more of your hard-earned cash, that's a very high return on investment activity. You can implement some simple processes to where you're able to keep up with all this stuff and pay a much more reasonable level of tax than you would otherwise if you were simply going to only focus on selling, send that 1099 to a CPA once a year, or plug it into TurboTax and just keep rolling. You'd be very surprised the impact those deductions can have.
Awesome. I think we have one more for you. So I think a CPA can answer this better than anybody. So how does a real estate agent find a good CPA and work with them?
So I think that, the Symba tax is a great option. There's other, opportunities where a really great software can connect you with a really great team of CPAs. If you're a little bit less tech savvy or you want to meet someone in person, believe it or not, there are CPAs that attend local real estate meetups. Those tend to be the best ones for people who are in the real estate industry. This shows that they have an interest in the industry. Sometimes they're investors, or they do a little bit of agent work themselves. I've even met a CPA who has his agent license and he's not closing very many deals, but that's probably a CPA that you're going to, mesh with very well. There's gonna be a lot of synergy there. The one thing on this question that comes to mind for me, beyond maybe networking at your local real estate meetup or going online and doing the Symba tax kind of thing, is you really want to make sure you're working with a CPA who is forward thinking from a technology standpoint. I've talked to a lot of potential clients. Not all are a good fit, but one of the very common themes that I hear is that their CPA is worn out. He's nearing retirement. All their stuff is filed on paper. It's sent in the mail, and the IRS still hasn't processed their return from 3 years ago. Those kind of horror stories can be avoided if you're working with a CPA who is collecting documents electronically, who is requiring you to e-file. These are things that, maybe seems like a big change in the last 10 years in the way taxes are done, but it is far safer, is far more efficient. And those are the CPAs running successful practices that have good current advice for you. The last thing I would want is somebody to be working with a CPA who hasn't updated themselves on the tax law in a long time. They're kind of riding it out until retirement. They're making you come in and drop off physical documents. Those are things that I see as red flags.
Yeah, you were mentioning there just CPAs who are retired. I remember reading an article just a few days ago. I'm sure you saw it too, but it talked about just there's an astronomical amount of CPAs or accountants leaving the industry to go work different jobs, or they're just retiring.
Yeah, young CPAs are not staying because of the workload. And I think a lot of you agents may laugh at that because you guys work weekends all year, and we only have to do that during tax season. But unfortunately, there are a lot of young CPAs leaving the industry, and a lot of the CPA industry is retiring relatively soon if they've made it all the way to kind of get to the end of their practice. But at the end of the day, the technology is what allows a good CPA firm to function and provide you with the most current advice, the simplest processes for tracking those deductions. So look for those kind of green flags and avoid people who are just riding out the final couple of years before retirement.
Awesome. Warren, are there any more questions before we move on to this next part?
Yeah, no, there's a whole set of questions that have come in that I've kind of held off on. I think we'll have to do some rapid fire questions towards the end, but I for one would love to see Symba, because I think a lot of agents would love to see what you guys have put together over there.
Yeah, cool. Well, we'll move on to that now. Thanks, Matt, for answering all those questions. And once again, we'll try to do a Q&A at the end if we have time, where you can set up a tax call with the QR code. But for now, we'll dive into the first part of Symba, which is the CPA service, where an agent uses Symba and then they work with Matt to file their taxes. So what we've created is a CPA service designed specifically for agents, and it's meant so that agents can spend less time stressing about their taxes and financial health and spend more time doing what they do best, and that's helping clients' dreams come true, whether that's selling or buying a home or becoming real estate investors. Some of the things you get when you get the Symba platform and working with Matt. So you'll get a stress-free annual tax filing experience. You'll have complete business transparency with Symba's mobile app. You'll be able to maximize your tax savings, and we'll send you timely push notifications to keep you accountable. So let's say you get really behind on categorizing your expenses, or quarterly taxes are coming up, we'll send you notifications about those type of things. If you're an agent who wants to become an LLC or S Corp, Matt can help you out there. And then there's on-demand support. If you have a question if something's a business expense or not, or a write-off, you do have on-demand support for that. And we like to call this technology with the human touch. Symba's the technology piece. Matt's obviously the human touch. And what you'll get with the Symba platform is you'll be able to view your profit and loss, very, very easy expense management. You'll be able to view your tax estimates here today. And then number 4 here, tax estimates on each deal. So when we built Symba specifically for real estate agents, it allows us to do some really cool things that other platforms can't. So we have deal tracking in the platform. And because we have deal tracking in the platform, we tie that into the IRS database. And we heard time and time again from agents that they just didn't know how much money to set aside for their deals when they closed. They didn't know if it was 20% or 30%. So what we did is added deal tracking, tied it in the IRS database, and we'll actually estimate the amount of money you should put away for taxes before that deal even closes. So that way you don't think you're getting a whole big chunk of change. We're actually showing you, hey, when this closes, put this much money aside. And then as you make more money throughout that year and move through different tax brackets, that estimated taxes on each deal will grow. You can view all your bank balances, and then you can log your miles. And then Warren, I'm going to join this call from my phone so I can demo Symba. But while I'm doing that, if you all want to schedule a tax call or check Symba out, you can. Let's see here.
So quick question, is there a desktop version of Symba, or is it exclusively an app?
So right now it's exclusively an app. We're working on the desktop version now, which that'll be released for beta in about 1 to 2 months. But that is more for teams. That's more of a team version of Symba. So if you're a team leader listening to that, you can reach out to me and we can talk about getting you on that beta list.
So Matt, you up for some rapid fire questions while Ryan's joining?
Yeah, I love that idea.
All right, sounds great. Let's jump in here. Can you use debts on your bank statement as proof if you don't have receipts?
Let's see, debts on your bank statement, or maybe like debits.
Probably.
So
I think that's what they meant.
Actually, now that I hear the whole question, I think what they're maybe asking is, are you allowed to just use bank statement expenses? You know, if I don't have the receipt, can I still write that off? The answer is that you can do that. Just understand that there is a chance that wouldn't hold up under audit. That probably comes down to a private discussion between an auditor and a business owner. And I can't tell you for sure, but you can at least put it on there. Just understand that it's a little more risky. The receipts are Loctite.
Gotcha. All right. Well, we didn't get through that many rapid fire questions. It looks like Ryan's joining.
That's okay. We have time later.
All right. Sounds good.
All right. Let me see here. See if I can pull this up.
And Symba is only for the real estate industry. Yes.
Correct. All right, here we go. All right, so I'm going to walk you through what our typical users, their workflows as soon as they get into the app. So you'll notice we have 4 pages at the bottom: feed, contacts, finance, and profile. What agents first do is they sync all their contacts from their phone. What we found talking to hundreds of agents is that for the most part, their truth of source for their clients is their phone contacts. So we made it super easy for an agent to, whether it's an iPhone, Android, they can sync their contacts from their phone in one step. Then you can begin to filter your contacts. So if you're like me, when I was an agent, or a lot of agents I know, you lose contacts or have a hard time finding them. So you can begin to filter your contacts by type. You can add different tags to them. And it's just a really easy, quick way to not lose any contacts. And next, what our agents do is they'll start creating deals. There's a couple ways to do it. You can go to the feed page and hit this green plus button, but we're going to go to one that's already created from the contact page. Scroll down, Luke Andrews, and here you can view up top. This is in the listing active stage. You can add a new deal if you want, and you'll see right below new there are different tasks to complete, and I'll show you how those work in a bit. But you can also call and text out of here as well, and it uses your personal number. But if we want to go see the deal info on Luke Andrews, we'll just choose the one it's currently in, And here's some of the key metrics we track. So date, address, price, commission percentage. Is it a percentage or a flat fee? Your split with your brokerage. Is there a referral fee? And what's the referral source? So we have a bunch to choose from. And if we don't have yours right now, you can select other. You confirm that. And you can go view the details of that deal. And you'll see sales price and the commission. But if you move it to under contract, which we'll do right here, this is where you can view estimated taxes on the deal. So you see that popped in there, take into account all the data, plug into the IRS database, show you the sales price, the net commission you'll earn, and the estimated taxes you should put away in your bank account when the deal closes. And then next, I'll show you the agent profile page. So a lot of agents have whiteboards in their office, hanging above their desk, or somewhere that they keep their entire pipeline and all the deals they've closed. Think of that, but on your phone in a distilled down, just easy to view version. So you can view your commission earned and volume closed, but we also project the commission you're going to make in your pipeline if you close all those deals. We'll filter to buyers pending here, scroll down and view all the pending deals you have and the commission you're going to make on each one. So you can kind of get an idea of your forward-looking income. I know that's something that's really hard as a real estate agent. Your income moves in waves, and this is just a great idea to see, okay, this is how much money I'm going to make if I close these deals. Now I want to show you the task part that ties into the deal tracking. So you can create buyer deals tasks or seller deal tasks. As real estate agents, you're very, very busy individuals. I know I was one. It can feel like your head's spinning a million different ways. And this is just a very, very easy way to not forget the little things. So let's say for your buyer under contract stage, there's a few things you always do: collect earnest money deposit, schedule inspection, get clear to close, tell lender what title company to use. You can create these, turn them off, and as soon as you move a deal to a deal stage, these will be created for you and they'll pop up here in the feed and the tasks. And then the last page I'm going to show you is more the finance portion. So think like QuickBooks, but just for real estate agents only, and no other profession. So what you're seeing right here is 2023. I'm going to go to 2022. And you'll see this agent had $54,000 in profit, their income $56,000, expenses $1,800. I know Matt could have probably found more expenses for this agent because $1,800 isn't very much. But it shows estimated taxes owed $14,000 and total deductions $1,500. Do your bank accounts, and then this is where you do more of the expense management part. So we'll go to recent transactions here. Scroll down, and let's say this Toro burger right here was a business expense. You took some clients out to eat, had a buyer consultation. You can mark it business. And really cool thing about the Symba platform is it does a very good job at a high percentage of knowing what category it is. So you'll notice I click business and it automatically knew that was a meal. You can go into this transaction, add a photo of a receipt like Matt was talking about. Something very, very important if you get audited. And then we take it a step farther. So let's say you have somebody that cleans a lot of the homes for you, but it's just under their name when it comes into the bank account. So our software wouldn't know that's technically a business expense because it's just somebody's name. You can create a rule for it. So mark all Toro burger expenses as business meals. So anytime it hits the Symba software, it's going to go ahead and mark that as a business expense for you, and you never have to worry about it again. And then one more thing. So if you are an agent who has a business account, we pretty much completely automate bookkeeping for you. You can come in here, click your bank account, and mark it exclusively as business. So any income that comes in, it's going to mark it as 1099, and any expense that comes in, it's going to mark it as business and try to categorize it for you. And then at the end of the year, when you're working with Matt, you can go up here and export all your tax info to him, whichever year, type his email in, and we'll give it to you in 2 ways. We'll actually fill your Schedule C out for you, but we'll give you an itemized expense list with the income you made in per city. I always know that was something I struggled with as an agent, was going back and figuring out how much commission I made in each city for city taxes. And that was kind of a feature request for me that I knew agents would love. And, they'll just save a lot of time there. So that as a whole is a Symba app. Think of it as like very, very basic. We're not a CRM, but we have very, very basic CRM functionality combined with the QuickBooks, just for real estate agents.
I mean, just from where I'm sitting, the ability to create those workflows to automatically assign certain charges from a source, like as a business expense, I have to do that manually through like every single week. My wife writes checks, or she'll charge at these same places that I know are like, they get tagged as business expenses and they're not business. So I have to go through and I have to remove them. This is kind of the other side of it, but it's really nice. I have a question over here asking how much Symba is.
Yeah, so Symba, if you pay for the whole year up front, it's $200 for the year. So that comes out to about like $16.50 a month. And then if you just want to pay month to month, it is $25 a month, but you do get a 14-day free trial before any of that kicks in.
So this should be a silly question, but is that charge automatically written off in next year's taxes?
Matt?
I mean, if they create that rule in the Symba and they track it, we'll definitely put it on there.
That's great. So just because I know we're coming up at the top of the hour, first of all, and everybody's listening in, and we still have most people who joined are still on, which says a lot. Does anybody have any questions about Symba? I'm seeing a couple comments over here. Love this, so seamless, no more pulling hairs. I mean, you can't get a better comment than that. Yep, real estate only, desktop version is coming soon. What would be the best way for somebody to sign up?
Yeah, so we have those QR codes up a lot, but you can visit getsymba.com. That is Symba with a Y, or you can go to Google Play Store or Apple App Store, iOS Store, and type in SYMBA as well. Or you can just email me if you want. That's Ryan, RYAN, at getsymba.com.
Since Symba doesn't track miles, does it interface with other apps?
Yeah, that's a great question. So it doesn't right now. We want to build mileage tracking in the future. And the reason we haven't so far was because I know a lot of real estate agents get behind on marking their business miles. Like, I mean, some people have 100, 200 plus notifications. So we wanted to keep the app very clean and not much noise, so that's easy to use for agents. So we left business or mileage tracking out for the time being. But if you use another application, you can enter those miles in Symba, so it gets added to your tax deduction.
Oh, so you still have the manual entry of miles available, just not the automatic tracking of miles.
Correct.
Has met my needs. Everlance mileage has met my needs more than my IQ. Thanks, Karen. It's always good to hear about. I've never heard of Everlance. It's always good to hear about new ones. If I open another bank account just for my business now, what do I do with my expenses and commissions from last month?
Well, I think maybe if you're going to be doing it in Symba, you might want to connect that other bank account and mark the other stuff personal. If you're just talking about like, am I going to be able to deduct it? You can still deduct it. You just need to make sure that you get those organized in some way. And I would highly encourage you to create a new business account for just business. That's sort of best practice and leads you on the right road to that eventual maybe S corporation, because you'd need a business account for that as well.
Yeah,
So
and
it's good practice.
I might be able to add a little something to that. If you do connect it to Symba, yeah, just leave the first bank account as personal, and then go in and figure out what commissions or expenses are business, and you can mark them as such. And then, like Matt said, connect the other account and mark it as business.
I think that question for me brings up this idea. Psychologically, we all want to make a clean cutover, right? Like from an accountant, I used to work for Lone Wolf Technologies. For those of you who know Lone Wolf, it's the main accounting and back office software for the brokerage space in real estate. They service more brokerages in Canada and the US than any other. And there was this natural feeling that every brokerage wanted to say, okay, we want January 1st as our cutover. And as a result, a lot of times people would delay those decisions, and then it would go another year, and then another year, and then another year. And the reality is there is no perfect time to make a transition, but I can tell you the best time to plant a tree is yesterday, right? So the sooner you can do it, the better. You want to, because if you did it today, you only have a month's worth of data to backfill. If you did it next month, it's 2 months worth of data to backfill. So the sooner you take these actions, the better, in my opinion.
Cool.
So I'm just like you. Okay. Well, I think a lot of us on this call, we always procrastinate. Not always, but it's natural. People have those psychological, like, you want it to be perfect and nothing's ever perfect. So I think if there are no other questions about Symba, we have a couple minutes to kind of circle back on some of these more obscure rapid fire questions. But Monica is asking, what's Matt's accounting firm name and where is it based?
Great question. We're based in Lexington, Kentucky, but we're a virtual firm. We have clients in most states. So odds are we can help you out. And then the firm is called Real Books CPA, and you'll see our logo on the Symba website as well.
And just to confirm, if somebody signs up for Symba, this annual deal, there is a version like that gets filed through your firm. Is that right, Matt?
So there's something we call a tax tier. If you pay for the Symba for a year up front, you can set a call with us to go over the Symba tax tier, or you can set up a call with us to go over Symba tax working with Matt before you even use the app. So there's a lot of ways to do it. And Warren, I don't know if we can do this after, but we can shoot an email out with all the info to anybody that participated. We can send Matt's website or Symba website and all the info on how to do everything we've talked about.
Yeah, absolutely. I can send an email out to everybody who joined today's call, or I can even send a list over to you guys if you'd prefer to send it out directly. It's totally up to you. But we'll make sure that we get that information out to everybody.
Cool.
So, okay, couple rapid fires. It's already at 5. I know a lot of you are going to jump off. I'm going to stop the Facebook live feed, just so that, this is special only for people who stay on today's webinar or view the webinar on the RETI website. So sorry, Facebook team, but we'll see you soon. Hopefully we see you next week. All right, so Facebook Live is done. You guys get this special inside scoop. All right, somebody said, how do you handle if 50% of your income was Social Security and the other 50% was 1099 from your real estate business?
Okay. It sounds like maybe you're getting Social Security, and then you also have a real estate business. And if I'm understanding that right, those are taxed differently. So Social Security will go on one line of your tax return, and your real estate business will go on its own schedule, which is called Schedule C, and that will flow to a different line on your tax return. They'll get added together, and that'll be your taxable income. So depending on withholdings and estimated payments, that'll kind of calculate how much you owe.
What deductions can a realtor claim if they own a rental property?
Another great question. I would keep those things separate as much as possible. The rental property goes on a different schedule. So remember I mentioned Schedule C was for the real estate agent's business. Rental property goes on Schedule E. And it's really important that they're separated because a rental property is not subject to the self-employment tax, those FICA taxes. So if you have that situation, keep that stuff separate, but treat all ordinary and necessary expenses the same. Track them.
If I have an S corp, we've already asked that question. Question just is rental property, is LLC better?
That's another legal question, I would say. It's just going to depend. But you can deduct your expenses either way. So if you have a rental property, you don't have an LLC, you should still keep track of your deductions.
Can you explain the section 179 and how it works on deductions?
Yeah, section 179 is just part of the tax code that allows you to depreciate an asset faster. You'll also hear in this space bonus depreciation. And it's just a way that, say you buy something like a laptop and it's a 5-year asset in the eyes of the IRS, which means 1/5 of that cost is going to be deducted on your return roughly each year. And under 179 or bonus, you can actually take the full amount. Last thing I'll say on this is that bonus has started to phase out. So bonus is only 80% this year. And going forward, it reduces 20% a year. So the 179 is technically better right now. Just make sure you're working with a professional on those things because they are somewhat tricky and there's disclosures that need to be attached as well. So a CPA is best when you're entering the accelerated depreciation world.
Gotcha. Okay, so somebody's just asking your thoughts on itemizing auto expenses versus taking the mileage rate deduction.
The mileage rate is going to be far, far better because it goes directly against your business income. Itemized deductions are not as great as they used to be. They doubled the standard deduction under the 2017 Tax Cuts and Jobs Act, which means that most people don't itemize or don't have enough expenses to itemize anyways. So you might as well put as many expenses as possible that are correct for your business on that business schedule and take a straight deduction from your commissions. That's going to be best there.
Okay, if you are on vacation and end up working 3 of 5 days, can you deduct any of your vacation expenses?
Yes, travel is deductible, especially if you work on that trip. I have some stuff on my website. Maybe we'll include this in the email, but there's a strategy called the weekend sandwich, which allows you to have a travel day, say on Thursday, work a little bit on Friday, enjoy the weekend, work a little bit on Monday, and then have a travel day on Tuesday. You sandwich everything together. That's almost a week. You could take your family, and a lot of those deductions or a lot of those expenses are actually going to be tax deductible just by timing it up right. We're in rapid fire mode, so I won't go too deep into that right now, but we do have it on our blog, so maybe we'll include that.
That sounds great. I'm actually very interested in that one personally.
Yeah.
Symba, okay, debits, Symba fee, we already talked about. Doesn't files or just open a bank account. Okay, quick rundown on tax deductible expenses. I know we touched on marketing and advertising expenses. We touched on mileage expenses. Any other big ones?
I mean, so before Matt, like I said, we have a list of 100 plus business expenses, so we will include that in an email. But as far as big one goes, that's a question for Matt.
Just think ordinary and necessary. I know that seems a little bit subjective, but that's the reality of it. So if it's normal for a real estate agent to take a certain deduction, you can do it. And if you need to do something to get a job done, to close a deal, whatever that may be, that's deductible as well. Just remember they have to be both. It's not one or the other. So I don't know if it's necessary for you to buy a gaming console to close a deal with a friend of yours. That's not really tax deductible because it's not ordinary for an agent to buy a gaming console on their business. But if they're both ordinary and necessary, then it's all deductible.
So like technology, software, desk fees, MLS fees, association dues, conferences, professional development, CE classes, all of that stuff, ordinary, necessary to do their job.
Yes, and one that I appreciate you listing those out because I almost slipped my mind and I wanted to bring it up today. Educational resources are also tax deductible. Coaching, online classes that are for real estate, and then books. Go to Barnes and Noble, go to Amazon, and if you want to buy some books from successful agents or about real estate, I mean, all of that's also tax deductible.
Okay, what about credit cards? I currently have a card that I use to charge fees, expenses until the new bank account actually has revenue for me to use. Is it okay to pay from my personal bank account? I don't know, that kind of hits a couple different things there, but I assume Symba syncs up any type of card, whether it's bank account, credit card, which a lot of people are going to try to generate those business points by using credit cards, right?
Yeah, you can connect anything. If you connect a credit card, the individual expenses or swipes that you do will populate into Symba. It won't just be your credit card bill at the end of the month. Every single thing you pay for will individually come into Symba.
That's great. And we're getting asked on what's your blog. I assume, oh, sorry, after you.
It's on our website. There's just a blog piece. Symba has an awesome blog as well. So when you get that email, check both out, read the ones that look interesting. Yeah.
And I just threw the link. It's getsymba.com if you want to go check out their website. And I know that there are connections over to Matt and Real Books over there. Wow, people stayed on past 5. I mean, these usually wrap up in like 40 minutes, and like, you can tell people are kind of itching with their like, hey, can you answer this quickly? I'm really impressed. This is such an important time of year when everybody's kind of scrambling to be like, okay, how can I get some money back this year, or how can I minimize how much I'm paying? I am so thrilled that you guys were able to join us and share your expertise. Thank you. And to everybody who joined today, if you are looking for a streamlined way to track your business expenses, to file your taxes, to have access to experts who can give you advice in a one-to-one fashion, I really encourage you to go get Symba. I think their domain is a perfect name, Get Symba. So thank you all for joining, and do keep your eyes peeled. It'll either be an email coming from me, Warren, or coming from these guys with that information that they've promised. So on that note, I hope you all have a fantastic evening.
Awesome. Thank you, Warren. Thanks, Matt.
See you guys. Thank you all.
See y'all.